The broadcast is now starting. All attendees are in listen-only mode.
Good morning, good afternoon, good evening, everybody, and welcome to our webinar on cybersecurity trends 2020 and what really counts now and after the coronavirus crisis. My name is Wolfgang Schwab. I'm consultant at PAC and responsible for the cybersecurity practice. And with me today is Simon Abrahams. Maybe a few words from your side.
Yes, sure. And I'm a research director in the UK, but I work with Wolfgang on cybersecurity as well as other infrastructure services. So this webinar is being recorded, and so you'll be able to re-listen to it if you miss anything the first time round, so you don't need to be writing tons of notes right away. And you'll be given a link to that afterwards, and we'll be sharing slides afterwards. We will have got time for Q&A at the end of it, so you should see to the right of your screen there's a chat box, and in the chat box there's a questions section where you can put your questions in, and we'll take those at the end unless there's something urgent like no one can hear you.
Okay, so for the next 60 minutes, we prepared the following agenda. We short go through the current situation of Corona. We show you our scenario logic. We go through the IT segments in general, the market sectors and how they are affected by the coronavirus, before we take a closer look at the cybersecurity market, which might be a little surprise for some of you. And after the conclusion, we go through the Q&A session. So pretty quickly, the current situation, as you most probably are pretty aware of it. Right now we have a little above 8 million infections, 450 people died during the global pandemic. And while in Europe the infection rate is pretty low in the moment, on a global basis, there's basically no all clear sign in the moment. So the pandemic is not growing like exponentially, but it's still growing, and there's no sign that this growth will go down in the near future. If we look at the most important economic parameters, we see that the crude oil price is recovering now. This is a good first indication of an economic recovery, at least if it comes to manufacturing. If you look at the exchange rates between US dollar and euro, and also on the stock Euro Stock 50, we see it's still very volatile. So the fear of a second infection wave is still great, and the markets are definitely completely unsettled in the moment. So much uncertainty in the market, and that's also not the best conditions for IT investments as well. If you look at the state response, that's really astonishing. At the beginning of the pandemic, basically all Western states were extremely fast with programs helping small and medium business and also large enterprises to come through the crisis. There were some politicians telling nobody will lose his job during the pandemic. No company will go bankrupt based on Corona. Well, but by now, so in the middle of the crisis, first questions come up how this should be financed, and we will see how that ends. Most probably, not everybody will stay at the same job, and most probably not all companies will survive that. So we will see what happens really. So Simon, how about our scenario?
Sure. So we have been modeling, gosh, since I guess the early beginning of the year, really, when we started to see what was happening in China. And we've been, well, had an early bad feeling about what might be happening. And to start with, we constructed I would say more or less positive scenario where we felt like maybe it would not last so long, we'd recover quite quickly, and there'd be limited economic impact. And we're pretty clear that that's not happening. And we also constructed the pessimistic scenario of it takes a long time to get a treatment. There's a big impact on GDP, and business does not return to normal until at least the end of this year, maybe next year. And also, although we didn't quantify it, we also were quite clear that there could be a worst case scenario, in which case it would take many months, years before business recovers. Well, I think we've seen that although our pessimistic scenario has not been fully achieved, like we do not know for sure that we will have anything like a treatment by August, actually the situation economically is not quite as bad as we had anticipated as a result. So we feel very much like we're between the optimistic and pessimistic scenarios at the moment. At the same time, we have not yet got medical treatments, but we're still seeing that business is not doing as badly as we had feared, as seen on those previous slides. So Wolfgang, if we go on to the next slide. So let's now look at how we see the impact on the overall IT market and how that reflects into the segments. And what you can see is that the industry-specific software has been particularly impacted, and software which depends on license fees in particular. And that is really because there's a CapEx fund in purchases. And in our modeling, we do a category of spend that calculates license sales together with maintenance, and it's really the license sales which are suffering in there. And we've seen rather headline-grabbing negative numbers like the SAP down 31% in the first quarter of this year, really due to that specific factor. And we've seen that in other license sales businesses, that they've been basically deferred where that's possible. So that's already had a huge impact in Q1, and it's likely to have a bigger impact further in Q2. Now, conversely, we see that some elements, things like infrastructure and service management, is rather stable. That those tend to continue because they're driving the business. And operating system and middleware hit harder because it's easier to postpone the upgrades of hardware and systems, which would then drive those sales. And as I mentioned at the beginning, there's particular impact on sector-specific software, sort of highlighted over on the left. And SaaS is, of course, doing quite well. SaaS has been the positive side of things, especially for collaboration. But obviously, if it's something more complicated and it needs a deployment project, that has been difficult and has slowed down during the pandemic. Oh, sorry, far too much talking. Over to you, Wolfgang.
Yeah, if we take a look at project services, they are hit hard, definitely. Even projects which are approved but not launched yet have been postponed. large rollouts, at least on the IT side, are mostly stopped, if possible. Contrary, on the OT side, the stop in production or the slowdown in production even pushed the possibility to do strategic projects on the OT side. So some IoT projects, some other production near projects are even enforced and even speed up just to use the possibility to work in the manufacturing area without disturbing the production itself. So it has some potential positive effects as well. And especially larger companies which are confident that they will survive the pandemic without too much long-term effect are pushing their strategic projects in the moment as far as possible, while especially smaller companies are just really on hold for many projects in that area. Obviously, consulting is hit the hardest, definitely. Management consulting, application consultancy is not the thing you want to do right now, while infrastructure consulting is still doing not good, but it's not hit that hard because security is still important. Network VPN is even more important in the moment with all employees virtually working from home or from other places. So these areas are prioritized in the moment. The same is valid for cloud computing, and that will stay not only for the next months but for the next years. So the preparation for being less depending on own employees, on own infrastructure is something which will stay. Also, the possibility to work from home will stay for the next years and most probably forever. And therefore, infrastructure services, and by that, the associated security services as well, they suffer a little, but not as much as the application services. The same applies to outsourcing, which is pretty resilient against the corona downturn. These are usually multi-year engagements. So if customers don't go bankrupt, they usually just are business as usual. Obviously, nobody works on site, but most of the delivery can be done off site as well. So from a remote place, so there's not that much impact. While contract staffing was one of the first things companies stopped, and also service providers stopped just to reduce costs on very short notice. And therefore, engineering services are also hit very hard because they are usually run in a contract staff model. So these kind of services are the first few companies stopped, and so the impact is extremely hard.
Sure.
So how about the overall IT market?
Well, this is the picture that we're showing, and on these slides, the green numbers are what we originally planned, I guess in December or something, and then the orange is the optimistic scenario, and the red is the pessimistic scenario. And like I say, we're probably in between optimistic and pessimistic at the moment for IT overall. You'll hear later that cybersecurity is, well, in the same scenario, but doing rather differently. But I mean, overall, what we're seeing is a negative 8% impact on software and negative 13% on services at the moment. And, you know, of course, it depends what you're talking about, because there is definitely, different impacts in different segments. So, in the infrastructure software and platforms, it's about -12%. In application software, it's -18%. In SaaS, it's +12%, which looks good, but is way behind what it was originally going to be back in our sort of December modeling. So, it looks like overall -8% on software. And in services, well, we're seeing that there's a really huge impact on the services associated with applications, something along the lines of maybe -20%. Basically a whole bunch of services like consulting and systems integration and training has kind of been stopped short, and it's doing a little bit better. Better being relative, sort of around -10% in infrastructure services. And again, the market for infrastructure outsourcing doing it a little bit better, sort of around -8%, which all averages out on the services side at around -14%. Oops. Next slide.
Okay, so if we take a look at the cybersecurity market, the picture is much brighter. I have always side by side our forecast from December with our forecast from virtually yesterday. So what we see is we will have a ditch in the growth in 2020, definitely, but we still have a growth. While the general IT market is declining significantly, the security market is still growing. It's not growing as it was before, it's not growing as it will be, but it's growing faster than the average IT market in very good years. So it's not the best year for cybersecurity software and IT service, but it's still a year with significant growth. And what we see is that virtually all security segments, at least for software, will grow after the coronavirus pandemic is more or less overcome, faster than we projected it before. So security is at the end of 2024 a little bit, so the market is a little bit larger than we originally expected. Main reason is that digitalization projects are enforced in the moment, and they will be enforced during the next years, and for that you need security. The same for cloud, the same for other strategic projects which tend to be very security sensitive and therefore need security investments, and user organizations are willing to invest in that area, and they need to invest in that area. So if you look at the software market, there's no decline. It's still a good growth, and so basically starting next year, the growth will be on a similar level to 2019. So still okay, and it will grow. The same virtually for IT services. We have a little bit of a downturn in growth in 2020, sure, but overall IT services are growing faster than security software, which is basically due to the fact that most companies recognized on one hand side that they just have a real problem to get security stuff. at least qualified security staff. And on the other side, in cases of something like a pandemic, it's better to have a service provider being most probably more capable to perform the service even under such conditions than if you do it on your own. So we see the same general development. The market in 2024 is slightly higher than we expected it at the beginning of the year. Growth is really good, especially in the area of managed security services. So the classical services are growing pretty good. On the GRC side, the external SOC services are also growing slightly higher than originally expected. All in all, besides the year 2020, Corona definitely fuels the development in security.
Okay, thank you, Wolfgang. So now we're going to have a quick look through at quite a high level the impacts by vertical sector. And I know we've got quite a few of our customers on this webinar, so worth mentioning that although we're going to focus on, we have focused on 2020 in some of the numbers I've already shown, actually we do have a breakdown by segment and country by country for subscribers. But anyway, let's go on to the next slide, Wolfgang, and thank you. So what we're really seeing is a little bit what you'd expect, that in the public sector space, being relatively unimpacted, certainly central government has been quite robust. We've seen a little bit more impact in local governments, where decision-making has been more problematic and slightly slowed the progress of projects. But telcos obviously have had extra workload on them, but they're not really slowing down. And pretty much the same for utilities. In spite of panic buying of water at the beginning, in fact, water was not interrupted. So that sector has been relatively well insulated. Total contrast when you look at transport. Transport obviously has been very, very severely challenged, especially anything to do with transporting human beings. There's been some less impact from logistics organizations back on the back of e-commerce, but really, it's been a dramatic period for them, and it just has a big impact on their ability to progress with IT projects of any kind. And it's somewhat similar for all forms of leisure outside of the home. And obviously, tourism sector is not going to have it's going to have its worst year in modern history this year, and particularly it's impacting SMEs, which have, I guess, least capability, least resources, least reserves to be able to survive this, even though it's expected that mostly on a domestic level that will restart in the course of this year and even this summer. But it has been a very dramatic year for those on the right. Wolfgang.
Yeah, if we go on, the manufacturing sector is also impacted really badly. Most manufacturers just stopped production, post-production, closed plants, basically due to problems on the supply chain, which basically broke during the pandemic, and pretty fast in the beginning of the pandemic. Some being still able to produce some goods had a problem basically that they cannot deliver it to their customers due to a lack of technicians on site, and as well with problems just being able to ship something. And especially dramatic is the situation in automotive, aeronautics, and oil and gas. If we take a closer look at automotive, it's not only the coronavirus which really hits the companies, especially the OEMs and their suppliers, but also the fact that there are some discrepancies between production or what they produce and what is really needed by customers. So the slowdown in automotive was foreseeable before Corona, and some managers at their places are a little bit, yeah, it's just a gift that they had not to explain why they need short-time work without Corona. So it's not all Corona, but some internal problems as well. If you take a look at retail, it's a two-side story. Food is usually doing well, pharmacies as well, filling stations as well, because they weren't affected by the shutdown. All other stationary retailers had a shutdown between 4 weeks and I guess 8 weeks in Italy. So that's a severe and a significant loss of sales, and therefore a significant loss of revenue. And that will definitely lead to bankruptcies in that space, and obviously the addressable IT market in that space will reduce dramatically. On the other hand side, if you look at online commerce, they did a great job in shipping. They did a great job in recovering their supply chains very fast. They are at least for the retail sector, the winners of the coronavirus, and we will see a shift in IT spending for e-commerce in the future, and for in the long run, the situation for stationary retail shops will stay problematic. And last but not least, banking, direct impact of Corona is little to none. Virtually, we will see in second half of 2020 that some customers just
Wolfgang, there's some rather nasty feedback loop going on there, so I just jumped in to try and take over from you. I'm sorry about that.
Okay.
There's not just nasty feedback, there's also echo. Let me speak for a bit while you play around with the microphone, I guess. So I think you just finished talking about retail, and obviously banks. Yeah, banks had little impact to start with, but as it says there, the reality is that when their customers start not paying, then they'll be significantly impacted. So there's a delayed impact that we're all, I guess, holding our breath around, because in reality, probably countries will not let their banks fail, and it will just turn into some more billions that will be owed by the governments of the nations, but there will be a direct impact for them individually. Wolfgang, can you move me on to the next slide? Yeah, so I was going to talk about the impact specifically on spending in cybersecurity. We've looked and talked a lot about what looks good, what looks bad in terms of vendor possibilities. But let's look at the spending. And really what we're seeing in terms of spend is that organizations are prioritizing their spend, and it comes down to the most important things are still getting approval to spend on, and other things more or less where possible are being delayed. So the strategic projects, the things which actually are going to generate the business for the future of the organization, maybe not this year, but next year and many years afterwards, those are actually, they paused a little bit, but they are still going ahead. And maybe there's a little bit less money, but there will be a little bit less money in the short term. But in the midterm and in the long term, those are getting funded because, well, really there isn't an option. If it's a strategic project, it needs to go ahead. And that's what organizations are doing right at the moment. On the more tactical cybersecurity projects, those definitely have pretty much ground to a halt, but they will take up again. It's really the pause for breath as organizations understand the scope and scale of the impact on their businesses before investment boards are happy to go ahead with external spending. But those will pick up again in the second half of this year and certainly next year. And that, if they're really driving business improvement, then for sure they will get the investment that they need. On the other hand, that bottom line, I mean, really, if it's really just an upgrade, just a replacement for something which is a bit legacy and it isn't really going to drive the business forward, then it's not happening now, and the available funds are being clawed back. So it's not to say it won't happen, it's just to say that the very limited expenditure on those less strategic projects. Right, okay. Back to you, and hopefully my phone is not giving you pain.
Is it better now?
Much better.
Okay, cool. So if we look at the market dynamics, we have to take a look of what's standard requirement, what was during the first COVID shock, and what will be the long-term effects. And we focus on 4 different things. First is digitalization, the next is the threat landscape, the third, the compliance needs, and the last one will be the security staff shortage and the effect on strategic decisions, basically. So digitalization is recognized as the answer to many questions during that pandemic, and it will be adapted even faster in the long run. So new business models will be driving the security market significantly. So we will see many investments in that space, and for that space you need security, and therefore we will see a growth in that space. The threat landscape pretty much or pretty fast developed during the pandemic. Many kinds of bad attempts to get access to systems and things like that. That will stay on a high level. It will not be becoming better in the future. So you have to cope with it, and investments in that space are just needed. A little astonishing thing was with compliance needs. Right after or right at the beginning of the COVID pandemic, when everybody sends staff to home offices, compliance and security was not that important in that moment. It was more a question of survival and getting the business up and running. That situation was for 5 days, maybe 2 weeks. By now and for the future, compliance is important and will stay important for virtually all companies. So there was a little ditch in the perception of the importance, but not in the long run. And security staff, it will not be that hard for companies at least for user companies, in the future, because they recognize they will not get it. They will focus more on services, and therefore they don't need that many security experts on site, but they rely on their service providers, and that's a good sign for all in the market, I would say, because striving for additional staff just increases wedges, and at the end of the day, if you really want experts, you have to rely on external resources anyway. So it will be a little bit easier in the future in that space. Simon.
Okay, yeah, so from a vendor perspective, you know, it's absolutely continuing what you were saying, Wolfgang. You know, the huge obvious change is that, you know, home working and remote office has taken over basically for anyone that can, and that's dramatically expanded many organizations' attack surface, and there's been an associated increase in the scope and scale of malicious activity, and that's, you know, being clearly seen. In parallel, transformation initiatives and strategic projects have kind of been boosted, even though there's been a pause. So really, you know, what we've described before is, you know, that kind of continued small dip and further take up of cybersecurity in many of these spaces, particularly ones that are associated with cloud use, because all of those projects, they just need to be secured. So there's really lots of opportunity, particularly as you were saying, Wolfgang, on sort of more managed and particularly automated services, you know, because those are the easy way around for user organizations around the skills gap. Kind of on the right there, the problem areas. I mean, it's still going to be the case that many customers and prospects are having to manage their budgets very carefully. SMBs will probably, in some cases, prioritize their business survival over their cybersecurity investments. And, you know, physical installs are still a problem. So that will be the case for a little while yet, although I guess increasingly people are learning how to handle that. But, you know, there's still absolutely a phenomenon of discretionary kind of projects being cancelled. Go on to the next slide, please. So, you know, this is really talking about what we were thinking about in sort of the last quarter of last year. So you know, just before Christmas, you know, what the priorities were then, and now what we see as being priorities right now, and how we anticipate that's going to flex as we come out of full-scale pandemic lockdown period, more into the cautious, somewhat recovery phase. And what we're seeing right now is, well, for sure, the immediate priorities have changed. So secure remote access into corporate systems and applications, that's needed, and they need to be secured, and it needs to be pretty much frictionless. And also endpoint protection is become vastly more important, you know, because most of the users, the end users, are far away from anyone who has IT competencies, and they may be accessing their corporate systems on their home personal machines. In the industrial sector, you know, securing the production environment is, of course, critical, because they're now trying to get back into production, you know, the industrial production. They need those systems to be secure. And broadly, these strategic projects will continue to get funding, and particularly the you know, it's highlighted there, anything which is driving down the costs is going to go ahead right now. And then in the aftermath of the pandemic, it's even more services. Services which can help deliver the security without needing the internal resources, and also which are location independent. So that's really what we're highlighting, really that turn towards managed services where possible, to enable, business to resume. Right, next slide, please. So now we're going to go through pretty much a summary of the conclusions. So next slide. And the first thing I want to really highlight that is the thing in the middle, the euro sign, the costs. That the costs are really back in focus. I think everyone in the sector has read and heard so much about agile and DevOps and digital and transformation, and things like managing costs. They have seemed sort of old-fashioned, sort of I don't know, 1990s, something like that. And in reality, that's come absolutely to the top of the priority agenda right now, and that's unavoidable. Alongside that, there's this point number one, I guess, absolutely unprecedented impact of the virus, driving change economically across all the sectors and all the countries. And so, for the IT market as a whole, it's been devastating, even if for the cybersecurity sector separately, things are not looking so bad. Wolfgang.
Yeah, for IT, it's not looking that bad. For some end user customers, it's looking really bad. So it's a big question how fast they can bounce back, how many of them can bounce back. We saw already some large companies in big trouble, and we see especially small and medium business having some real problems to survive that pandemic.
Right. And in the next point, we say first hit will be first to recover, but unfortunately, we're not talking about the end user organizations. Actually, we're talking about the business services and software that was first hit. So really what we're saying there is that the project-based services, maybe the small AI projects that were quick to stop, they will also be quick to start. So we expect those things that were quickly and easily stopped will actually also be quickly and easily restarted as business confidence increases.
Right, and what basically all customers will value is if you help them to reduce the IT costs and therefore the security costs as well. So automation, useful usage of offshore resources will be highly valued, not necessarily well paid, but highly valued.
Right. And the crisis is absolutely boosting business transformation, I'd say. And of course, the business transformation requires an associated IT transformation, which needs to be secured. And so what we're seeing, and I guess that's what the icon says in the middle, is there's a lot of more use of public cloud-focused services and managed services and digitalization at the back office. And that all needs to be secured.
Yeah, and last but not least, we already said it, end-to-end transformational outsourcing, including security, is currently preferred by many end-user organizations. And therefore, if you're a specialist, you need some partners just to, with a broader IT portfolio to be included in such contracts and in such customer engagements, because then it's much easier to come through the crisis and to grow in the next years. And saying that, we can start the Q&A session.
Well, we can when we have some questions, actually. At the moment, all participants are able to join in the questions, but you'll have to do the questions via the questions chat box over on the right. If you would like to submit questions, that would be our pleasure to take them.
So obviously we were very clear in our statement.
That may well be, but equally, I think it's always a little bit daunting to be the first person to ask a question. Are there any questions that you want people to ask, Wolfgang? Oh. Right.
Not necessarily.
Well, one of our colleagues has internally prompted us saying, is there any impact on software-defined networks, and do we foresee an acceleration in a massive use of internet versus private networks and SD-WAN?
That's the question of perspective. For the backbone of larger enterprises, SD-WAN and similar technologies are the technology of use for the next years, I would say. For home offices, in the moment, it's definitely internet. Most of the companies are using a kind of VPN tunneling on top of it. That's for sure. In the long run, that will stay more or less. But obviously, the amount of VPN tunnels will grow significantly, and it will stay on a higher level because it's not foreseeable that that all employees now sent to a home office will come back to normal offices in the foreseeable future. Because
no, I agree with you. I agree with you. Well, we're getting lots of questions in, which is great. So I would say for sure SD-WAN is really interesting and lots of people are using it. I think traditional private networks over time will die. I think it's going to be very interesting to see to what extent 5G can take a chip out of the private networking market, but I guess all the telcos will fight each other out and try and disrupt each other's domestic markets with software-defined networks.
That's correct. Yes.
I saw a second one. There's a question saying, can you give examples of transformational outsourcing projects?
Sure. It's basically the more or less traditional application and data center infrastructure completely outsourced to a service provider, which has not only the task to run the existing infrastructure, but also to move it on the long run to a cloud infrastructure, most probably something hybrid, so something more in the private cloud, more, and the rest in the public cloud.
Okay. Yes. I see another
even not only for the IT parts, but also for the OT part as well. Right.
So I'm scrolling through, and I hope you are, Wolfgang, too, so you'll see the different questions. So it mentions, or a question says, a querying or maybe a disagreement about the first things being hit, be the first to recover. Just to be clear, the vertical sectors, we're not talking about that when we say the first that were hit. I mean, the first IT spending that was hit will be the first to recover. But for sure, specific vertical sectors that have been hit really terribly, like I don't know, hospitality and tourism, they will not be the first to recover. That's for sure.
Right.
There's another question. I'm just pretty much going chronologically. Negative impact on various verticals. How does this lead to an increased spend on cyber already in 2021 and following years? I mean, it's true that the businesses of multiple, well, actually, I should let you talk, Wolfgang, since you had those detailed graphs.
Basically, yeah, the IT spending in general, IT is going down significantly, but the strategic projects are still running. And that's where the security spending comes from. So all kinds of new business models need some traditional IT, so some cloud computing, some applications, definitely. But first of all, they need security, because otherwise the trust in such business models is not a given on the user side as well as on the provider side. So the investments in that space are huge for security, and therefore we see a clear growth for security spending, while the general IT spending is declining, which means not that, for example, public cloud spending is declining. It's not growing that much. That's important.
Yes, I mean, I think what we're really seeing is that everyone has made their IT environment much more complicated by the changes they needed to do just to survive, and because they made their IT environment more complicated, it needs to be secured, and they're investing in those things that will allow them to get back into kind of trading operations.
That's what I wanted to say.
Wolfgang, you mentioned that compliance was a low priority in the short term, but how quickly do you expect it to regain? I think you were really meaning just it was low priority for about 2 weeks. Is that correct?
Yeah, that's correct.
Okay,
yeah.
So it's already recovered. Is the answer to that question?
It's already recovered. Yeah.
Yes. Okay.
It was the first move, so to speak, when everybody decided we have to send our employees to home offices. In that moment, the possibility to work was much more important than if these connections, which are needed, obviously, are safe or not. By now, that's completely fixed.
Okay, there's another question about 5G, actually. Slightly, well, would you see any negative impacts on the adoption of 5G, or on the contrary, will this accelerate the rollout of 5G to the detriment of SD-WAN? Very focused questions there. I think it's not too much to do with cyber, but I think the reality is that 5G has slowed down just because rolling out networks is tricky when all your engineers are meant to be at home. Obviously, they will that behavior pattern will and is changing, and people can continue with that. But I think that it's been slightly deprioritized, because I think that the telcos have been more focused on making sure that in spite of the traffic load of home working, that all the broadband that's intended for sort of domestic entertainment is nonetheless capable of supporting home-based workers. So I think it's just been deprioritized. And we have another question, which is
Wolfgang, just a second. I guess that depends on the country you're talking about. At least in Germany, it's not defocused, so to speak. Telecom just announced that they will enlarge their speed to come up with 5G even faster.
So they're actually trying to go for the fixed wireless broadband opportunity a bit, I guess.
Yes.
Okay.
Yes.
Interesting. Well, I guess my perspective is very UK centric, and the availabilities that exist today in 5G are very, very restricted geographically, and
Yeah.
doesn't seem to be changing very quickly as everybody said it would when they were doing their marketing initiatives. Anyway,
Yeah.
that's my cynical perspective. Will the search, we've got 3 minutes left, just 2 more questions. Will the search for a better world in the environment way of speaking have an impact on the markets? I think maybe, but only in the context of changing how governments and very large organizations make their investments. So if government decides to prioritize something, then that will have a big impact. But I am not seeing that happening right now. What do you think, Wolfgang?
I didn't see that as well.
Okay, last questions. The last question is not even a question, which is in fact just tell me that the questions will be available after the webinar. So maybe we'll include written versions of these questions in what we spin out after this webinar. I think we are coming up to time, and I think we don't have any more questions. Thank you. Yes, the beautiful picture of our beautiful faces. So listen, everybody, thank you so much for making time to join. I know it must have been kind of a little bit of a decision. Do I want another screen-based meeting in my calendar? So appreciate you making the time to dial into this webinar. Watch out for updates. Of course, contact us if you need any help with anything. We really hope to speak to you soon. And really nothing more to say other than thank you and stay safe.
Thanks a lot and stay safe.
Bye-bye.